It's a double treat for the market today. The Sensex topped 25,000 and the Nifty zoomed past the crucial 7,700 as investors went on a buying spree on hopes of an early interest rate cut by the RBI. Last week's decision by the US Central Bank to keep a cautious stance on the Fed fund rate also lifted market sentiment. The Sensex surged over 330 points in trade today on an all-round rally with banks leading the way. With markets seeing some stability post the union budget, the government is now looking to fast-track its divestment program. Remember, Finance Minister Arun Jaitley has kept a target of 56,500 crore rupees to be raised through PSU stake sale in the next fiscal. We learned that Niti Aayog has started readying possible candidates and is likely to recommend the government cuts its stake in profitable PSUs as well to 26% without ceding management control. The sudden rush in the Indian market, what it means for the Indian economy and you, the consumer on the street, is our top story right here on India Tonight.
There couldn't have been a better start to the week on Dalal Street. In a double treat of sorts, the Sensex topped 25,000 and the Nifty crossed the crucial 7,700 mark thanks to all-round purchases by foreign funds. What is driving the market is the hope of a substantial interest rate cut by the RBI. Add to that US Fed Chief Janet Yellen's dovish commentary. There is a sudden rush of adrenaline both from Desi and global funds.
In India, the worries are far bigger that are coming up, and I can assure you that much. On the streets of trade, the worries are far, far bigger than most people imagine in the stock market. So yes, we are based on the fact that I don't think a market beyond 82, 8,300 is a worth to stay into for some time. You might as well stay on the sidelines and buy into a correction now.
Bank stocks were clearly the star of Monday, with the country's top lender SBI rallying almost 3%. Shares of HDFC Bank and ICICI Bank gained 2% each. Cement was also the flavor of the day on the back of positive brokerage reports. Market experts say more than the interest rate cut, it's the resolve by banks to tackle the bad loan mess that's driving the rally.
For the time being, the driver of the bank is not the profitability but the NPA recovery. The amount of NPAs which are burdening the banking system, especially the PSU and corporate focused private sector bank, that needs to be tackled.
Since the budget, FIIs have pumped in 12,000 crore rupees into the Indian market, backed by domestic funds too, that have been cherry-picking blue chips. Retail investors who've been keeping on the sidelines so far have also started showing signs of a comeback. The only question in everyone's mind is how long will this party last? With Utkarsh Chaturvedi, this is Sriram Iyer for ET Now in Mumbai.
All right, let's take this forward and to break down this rally and understand the factors really at play. We joined by Aisha Faridi from our markets desk and Ajay Sharma from our research desk. Aisha, to you then. 7,700 conquered in the Nifty today for the first time since January 6th. What really fueled all those gains there on the street today?
Well, sectorally, you would have to thank real estate, cement, as well as PSU banks, which led us all the way to that 7,700 mark in today's trading session. And considering how truncated this trading week is, it's remarkable that we managed to clock that level. Even pharmaceuticals, which were actually a bit of an underperformer, they finally saw some recovery from the lows of the day. So let me quickly walk you through the sectoral movers. Cement clearly was one star performer, and this is a trend that we saw in last week as well. Friday also, these were stocks which saw a big move, and today you saw a nice follow-through coming in Ultratech Cement, which was actually the top mover on the Nifty for the better part of today's trading session. Smaller ones like in India Cement, or for that matter in ACC and Ambuja, they were all holding out very, very smartly. FMCG as well, again, this is a trend that we saw last week, saw follow through today too. ITC held out very, very smartly, a brokerage upgrade coming in on this stock, and that also augured well on the sentiment. Unilever, Jubilant Foods also have been movers the last couple of trading sessions. The financials got a good leg up today, so not just PSU banks, but the periphery stocks as well, the likes of an L&T Housing Finance, Divan Housing Finance, they were all looking very smart, and IDBI Bank held out very smartly. SBI, PNB were your other movers today. Aside of that, like I said, the recovery also came in some of the beaten down pharmaceutical names. So Oro Pharma shot up in the green by about almost 3%. You also had Interglobe Aviation, again a brokerage note coming in, that reacted positively to this one. Bharat Forge and Ashok Leyland was some of the other big movers in trade today. It's a good momentum. Let's only hope it continues tomorrow and we don't see any profit taking ahead of that long weekend.
Fair point indeed. We do hope it continues tomorrow. But Ajay, to you then, we've witnessed a swift rally on the Dalal Street in the last few trading sessions. What are the key factors at play here, and is this trend likely to continue? Should we be keeping our fingers crossed at all?
That's correct. A furious rally in our market continues. And today also we saw in the last hour of trade a big bout of short covering and fresh longs taking the Nifty above the 7700 mark. In fact, come to think of it, since the budget day lows, Nifty has risen over 900 points, almost 1,000 points. Who would have imagined? In fact, large part of on the street, people have not really been able to participate in this really swift rally. In fact, it's all about FIIs, and they have really been the big participants and also the big contributors to this big up move. In fact, look at the data point, 12,000 crores worth of stock purchases in Indian markets in the month of March alone. In fact, that's been the trend. Across emerging markets, the ETF flows have turned positive, and India is also benefiting from that. Of course, today the big up move was also, one of the triggers was the cut in small savings rate, which came in over the weekend. Not only does it indicate as a precursor to a rate cut by RBI in the April 5th policy, but also nudging the small and the HNI investor more towards equities. So that is also one of the big leg ups which was given to our own markets. But net, if you look at the internals, the India VIX, which is also a caution gauge, has fallen to lowest levels of 3 months, seen in 3 months, and the technicals look very strong in the market. So traders believe that this up move, at least till April policy meet, may have a little more upside. But of course, the traders are also cautioning to trade with strict stop losses.
Right, Ajay and Aisha, thank you very much for joining us with a quick perspective on what's really fueling the rally and what is indeed the way forward. But time to get you a big voice on the show then. Robert Parker of Credit Suisse remains bullish on Indian markets in the long run. We get you his top sectoral bets going ahead.
You've seen actually a very interesting trend in the last 2 to 3 weeks. With clear inflows by foreign investors into, for example, exchange-traded funds and mutual funds investing in India. I continue to like globally, and this would apply to India as well, the IT sector, where I think cash flows remain strong, where I think the Indian industry is competitive and I think will benefit from further foreign and domestic investment spending. I continue to like consumer discretionary sectors, and I think that is a very clear long-term trend in India. And I think one big theme, assuming that I'm right, and that commodity prices do not rally significantly further from today's levels, I like industrials, which are consumers of commodities, because their input costs relative to 1 year ago are significantly cheaper, and I think that will be reflected in improved corporate earnings.
A very quick look at the trading market right now, and that is indeed Wall Street. Stocks are struggling to gain as investors react to a sharp fall in existing home sales for the month of February. The existing home sales fell 7.1%, the lowest level since November. This fresh economic data dents the market mood and heightens worries about the U.S. housing market. Volatile oil prices have also been dragging indices down. On your screens right now, markets trading in the green, but very, very flatly so. In Europe, it's been a choppy session of trade. Most indices ended lower as investors took note of the volatility in the oil market. The uptick in telecom and auto stocks failed to boost market sentiment. On your screens right now, you have a glimpse of how Europe is trading, but very marginally in the green there again.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.